My name's Eli Delaney, and I have the honor of meeting some pretty cool people. These are the entrepreneurs, the artists, the creatives, the game changers that are making a positive impact in the people that they meet. And I'm a firm believer that the people that you meet can get you anywhere you want to go. And this show is my way of sharing them with you. It's my way of also helping you be cool people. All right, welcome back to the show again. Eli here, and today we've got a guest. Paul Childers and I have had the lucky part of being in a lot of the same communities for a while. And it's funny because we've been running in circles, but we just recently got connected and had a great conversation. So I wanted to bring him on the show. So let me tell you a little bit about Paul. Paul is a husband first, a father second. He's been married for over 15 years with two wonderful kids. He is also a business owner that is actively looking to educate and help other businesses attain loans that are smart and don't always risk their personal assets, which most of us that are starting in business, we're like mixing all that garbage up that we really shouldn't be doing anyway. And his job is to get out there and help us quit being so silly with all that stuff. So with that said, Paul, welcome and thanks for hanging out with me today.
Yeah, thanks for having me. I'm glad to be on, and hopefully we can share some information and maybe demystify some rumors that are out there about lending.
Yeah, that sounds like a good idea, because the reality I mean, if you think about it, so many entrepreneurs when they start out, they're bootstrapping it from their own stuff. And so we get stuck into that. And a lot of times it's more a lack of education than anything else. And I love that we have people like you that are out here. So tell us a little bit more about what is it exactly that you do, and how did you get into this side of the world?
Yeah. What is it exactly that I do? That's a really loaded question sometimes. Really what it comes down to is just helping people understand that there are different systems out there that we can leverage for our business growth that will protect us, and kind of when to use them and how to use them. And there are systems out there that sound and look really good, and they can be if you have other areas of your business mastered and manage your payment cycle well, manage your cash flow well. But those same systems can be really bad for you if you don't have that mastered. And I'll kind of clear that up as I kind of progress here. But what got me into this space was I spent years in automotive, almost 8 years in automotive. And during my time there, what I had done is I worked my way up from sales at a Toyota store to finance manager. And Toyota was one of the first times where I had experience doing full commercial leases for a business. It was for a forestry company out of Montana, and they were also in Canada. And at the end of that process, I wanted to pull my hair out after writing all of those leases for that business. However, that was my first exposure to a business and a person being able to get a large sum of vehicles for their fleet without having to put up any of their personal information. We just used only their business information to do that. And a lot of what funded that, or like what pushed that forward, was their fact that they were an established business and they'd had an established business credit score. Plus they had a previous relationship with Toyota Canada. So fast forward a few years to when I joined Chevrolet. And when we got into fleet financing with Chevrolet, it was kind of the same thing. Is some vehicles, some businesses would qualify for loans without personally guaranteeing things, and others wouldn't. And so that kind of led me down this kind of a hole of like, well, why are there two different funding systems for, business owners that exist out there in the business world? And why don't more people know about this? And so I kind of went down a rabbit hole and kind of started doing a little bit of self-teaching, self-learning. And ultimately, when I decided to leave W-2 world and start a business, it was kind of a natural step for me to build a business around educating people on this stuff, but also educating people on some of the other things that I learned while doing, financing for automotive, which was you still need to have a good personal credit score, but you need to know how to protect your personal credit when you're doing stuff for your business. Credit cards are good for certain things. I see a lot of and I'm sure you've seen these too, a lot of 0%, funding for 150 to 250K. Well, that's just people that are offering to go out and get you credit card stacks from different lenders, smaller banks, regional banks, stuff like that. and then they charge you 10 to 14% of the total amount that they get you. So not only are you getting a bunch of credit cards, but you're also getting a huge chunk of them taken out right off the top for something that you can do yourself if you just take a little bit of time to do it. And most of the time, people don't know or don't manage their cash flow enough to be able to manage that many credit cards. And so what happens then is my company comes in, and then we got to go through, we got to figure out how to consolidate all that debt back under the business, because a lot of the time those credit cards are a mix of personal and business. So it's kind of a culmination of like just education, informing, and then letting people know that the system that's out there really isn't that difficult to use, but you've got to have some very clear steps and foundations built in your business in order to get it. And that when you do have clear separation of your personal and your business, and you do have, healthy comparable debt built up under your business, you get, and I use that word lightly, I guess, because it is leverage, right? You can use it or you can abuse it, but you get access to typically 8 to 10 times more capital than what you had before I started working with you, once we get everything separated. And the majority of that capital that you get access to either doesn't report to the personal credit bureaus or doesn't use your personal information at all. So that's, in a nutshell and kind of a winding journey, what I do.
Nice. And you brought up a couple of really good things there. Like number one is the credit card stacking. So I know from the speaker coaching world, I've got a lot in that where people are selling higher ticket programs, $50,000, $60,000 coaching programs. And that's how they get most of their clients in that are doing that. But generally it is under a personal credit situation. So that is an interesting thing to kind of think about. That is, how do we start shifting that and getting that credit outside of our personal? And what are the first steps for somebody to kind of get going in that direction if they're like, okay, wait a minute, I've been doing this all wrong? And is it like, if they're already using a ton of their personal credit, what is the first thing that they should do to go, okay, let's start fixing the problem?
Yeah. So if they're not already using a bunch of their personal credit and they've got a good personal credit score, the key is to kind of understand what is it that you're trying to accomplish as a business owner. And I think where we tend to make a mistake is that we, as a business owner, sometimes project ourselves as the business, and that really isn't true at all. And what we should be striving to do in almost all aspects of our business is set it up to actually be a business and not just be a self-employment center. And what I mean by that is like removing yourself out of the business in almost all aspects that you can. And part of that is financially. So structure your business as a LLC, a corporation, right? Make sure that your address is accurate on your Secretary of State, your IRS, all those documents that are out there, Duns and Bradstreet, your bank account, Experian, and just match little data points up across these data centers that are out there, because that's where a lot of people end up getting like mixed up, is they don't have the data matched properly where it should be, because we change addresses, or we started in our home office and then we got a new address, or we started in a different property and then we moved to a bigger one. And then like we just, in the means of it, because there's so much going on, we forget to go back and update it everywhere. We just assume sometimes that it just is naturally going to happen, and it doesn't. But that's the biggest thing, is just separate yourself out from the get-go by structuring your company right. Having a clean address, doing it in the, obviously if you work out of your own home, like there are ways to do this with a virtual office. And even a case, if you have to for the short term, you can get by with a PO box if you need to. It's not going to hurt you for the long term, but like, just what are some things that naturally need to happen for me to not only be able to build a business, but separate myself out, so that ultimately my goal is to either pass this on to somebody else or sell it. I don't think anybody started a business just to take it to the grave with them. So it's just little things like that. Like, what is it that you want out of your business?
Yeah. Well, and there's a couple of things I want to unpack with that, but what you just said as far as building the business as if you're going to sell it, Because reality is, it doesn't matter what kind of business we have. I mean, for me, I don't know that I ever want to sell my business, but that doesn't mean that I shouldn't be playing that way just in case and preparing, putting all the steps in order to make it so I could have it that way. Because ultimately, you're right. We should be having a business that we could be removed from as much as possible, so it just works. That's the whole point of not having, not just creating your own job. And so I love that you're doing that. But I want to back up a little bit. You mentioned Dun and Bradstreet, and I know it's so funny because I've known that name forever, but I know there's a lot of businesses out there that don't know what that is. And so, can you kind of talk about that for just a minute? Because it is kind of like, what is that thing and why do I need that?
Yeah, Duns and Bradstreet as a whole is, in my opinion, a giant racketeering company. So they created the system, worked with lenders and big suppliers and vendors, and put this credit system in place that you have to have, or at one point in time, I shouldn't say you have to now, but at one point in time, you had to have their DUNS number in order to get access to building and acquiring business credit. That is starting to go away now, where if you don't have a Duns and Bradstreet number, you can still build business credit because Experian and Equifax are starting to kind of branch out. NAV is kind of starting to come in and take a place, take its hold in their credit safe has made its way across the seas and is now over here and is another, business credit bureau and reporter. And so there's a lot more systems out there that are in place that allow you to build your business credit. But Duns and Bradstreet is still going to be the quickest way for you to become a viable business in the business bureau's eyes. Why? Because they have history, right? And they have all the relationships. That may be shifting, but that shift is going to be very slow. So I've heard people before that are like, well, I don't have a Duns number, but I've got business credit. Okay, great. You're slowing yourself down by not having that Duns and Bradstreet number. And all that is it's just a digital number. It's like, consider it like like an API key that you have to use from a website to connect your CRM to it, or a security code to put into your home to be able to enter the house. If you don't have it, you can't get in. So if you don't have Duns and Bradstreet at one point, you couldn't get into the business bureau systems. There are now other ways into the business bureau systems, but Duns and Bradstreet's still going to be the fastest way for you to get in and become a viable business in the business bureau's eyes. But that doesn't mean you have to pay them to do that, just to be clear.
No, that is great. And it is one of the things, like I said, I know that that's been around forever. My first business, I got a Duns and Bradstreet because I didn't know anything about it. I was like, okay, supposedly as a business, I'm supposed to have this thing. So whatever, I got it. You're correct. They still don't charge for it, correct? Isn't it just to apply for it type of thing?
You can get it for free still. They will. I mean, if they get a chance, they're going to bill you,
Right.
and which is
They're going to upsell you on anything they possibly can, I'm sure.
Sure.
Awesome. So with that, I mean, you've gone through a lot of different things in there. Nowadays, you said there's more the credit bureaus that are focusing on the business side of things. Are they pulling from your EIN versus your social like they would on a personal side? Is that how that's working?
Yep. So what they're doing is, once you get into the system and you get connected to a couple of vendors, and here's the fact of the matter is like, not every business is going to benefit the same from business credit, even to a point where there have been situations when talking to clients from like business credit isn't going to do you anything. Like, it just, like where you're at and what you're wanting to do and what you're trying to get out of it, like it just doesn't make sense. Right. Mm-hmm. So just for anybody listening, just be aware of that. Like, business credit isn't some miracle thing that all of a sudden gets you access to a bunch of money and then, you're free from all your personal liabilities. Right. Like, it doesn't work that way. I know some people sell it that way, but it is a system that once you get into it, through your Duns and Bradstreet and through your Experian and then through your vendor accounts, like let's say you've got a credit card with Chase Inc. They report to SBFE, but they also report to Duns and Bradstreet. Well, SBFE is it's a small business financial enterprises, basically is what it is, right? So they're connected to each other with Duns and Bradstreet, but you can still build business credit even if you don't have a Duns and Bradstreet number because the SBFE.
Got it.
Well, now let's go and say that you just happen to be a company that does some cleaning. You have an account with Uline. Uline reports to Experian. And so if you don't have a Duns and Bradstreet number, but your business is still set up and all your information is accurate, and you've got an account with Uline and you've got a credit card with Chase, and then you have an Amazon business account, all of a sudden you've got business credit because you're connected to enough points that it can reference back to your business. As long as your business's data is accurate and very clean in the systems, it will report back and direct towards your data and your business, and you'll build business credit.
Very cool. So when let's talk about, you were talking about the difference between like getting away from personal credit and if you have good personal credit going in. But I know, I mean, there's a lot of things, especially in today's world, there's a lot of things that have just gotten messed up. People have run into some problems with credit in general because they overextended themselves and whatever happened with it. Say, for instance, they've been bootstrapping everything on their personal credit. And so their personal credit score may not be all that good. What is this going to help them to establish the separation of the two so they can have a good, start building good business credit, even though their personal is a pain? Or is that going to be, they got to fix that first?
So business credit in its most like natural state of just building it doesn't even reference or pull personal credit at all. That's another misconception that's out there, is that if you don't have good personal credit, you'll never get good business credit. Well, I can tell you for a fact that I've got some people that have really poor personal credit that are still getting access to vehicles on 1.9% interest rates through commercial lenders like Ford and GM because their business is viable. Now, I will also say this. There is a connection between people that run a good business and people that have good personal credit. Why? Because usually good business owners understand systems and processes, and they understand the importance of protecting those systems and processes. And one of those systems and processes that exist that we have to protect is our personal credit. And so they don't usually have bad personal credit. But sometimes you get a divorce, bankruptcy has to happen, child gets sick, you get a bunch of medical bills. Like, life is messy. And so even the most prepared people have messes. You have a felon, in your past life, you were put in prison, you have a felon on your record. That sticks with you and makes you unlendable in a lot of cases. So I work with a couple of business owners that are felons as well, and we're still able to get them loans and stuff the same way a normal person would through their business off their business credit score, because it doesn't even look at their personal information at that point. So yes, you can do that even if you have bad personal credit. It's good to have good personal credit though, because the SBA is going to look at that and it's going to give you a better score and give you more money. Like there are just certain areas of your business where having a good personal credit score like matters, but you can build it even if you don't have it, or you can build it if you've got previous marks on your personal record that make you unlendable. If you've got a personal bankruptcy in the past from a medical emergency or a divorce or a failed first business, that doesn't prevent you from being able to get funding if you know how to use the business credit systems.
Okay, very cool. Now, since like a lot of the people that listen to this show they're solopreneurs. Some of them are service-based, but a lot of them are service-based as in like they might do digital services, they do coaching, different things like that, as opposed to say a brick and mortar that's going to be like you were talking about getting a Uline or vehicle loans. What are some of the other things that are possible?
Yeah.
And is that like, no, we're focused on that kind of stuff? I mean, how do we look at that?
Yeah. So first and foremost, understand that if you are a solopreneur, like I am, right? I work out of my home office. I don't have a ton of overhead expenses. And this is where I tell people, like, business credit may or may not make sense for you to have, depending on what you want to do. Like if you're just content being a solopreneur, working out of your home office and helping clients, and you're able to run that with your cash or, very limited credit, like that's fine. Like go ahead and do that. For me, what I'm doing is I'm building up my business credit so that as I grow it and get to a spot where I can pull myself a little bit more out of this business, I can use a business credit line to go put that money down on a business purchase or a house purchase to start a residential or a real estate portfolio, or, just to kind of start building it. But it does take comparable debt to increase the limits that you have. So the more debt that you have, and the better you pay it, and the more you take care of it, and the more you run those expenses through these business bureaus, the more you're going to build your business credit. So The catch is if you're a solopreneur and you're working out of your home office, well, I don't have a lot of expenses. Okay. Well, neither do I. So I use Uline and I buy, some home goods and, toilet paper, some cleaning supplies, because it only takes $50 a month for that to report to a trade line. And then I go to Amazon Business and I buy, like my business books and business courses and business materials through Amazon. And Amazon's a minimum of $100 for it to report. And then I just fill in the blanks with different things that I may need from time to time. Like I use a company called Credit Key for a credit line, for purchasing, some of the licenses that I get to get people into my credit system. That reports. I've got a business credit card through Chase Inc. that reports. I've got, different accounts with different vendors to make, I'm not wearing the t-shirt right now, but a couple of the t-shirts I wear, like I just buy like 2 or 3 t-shirts through them every 2 or 3 months. And that reports at, $75 or whatever it is that I pay. So you just have to get a little bit creative and figure out what is it that I can do and accomplish to build up my trade lines. So then when I am ready to make a bigger step, I have a business credit record. It is in good standing. And then I know that initially I'm not going to have access to 250,000, but I may have access to 50,000 that I didn't have before that doesn't use my personal information that I can use to then get into a new vehicle, which then when I get into that new vehicle and I'm in it for 6 months, then I can use that because that's going to build up comparable debt, saying I can manage, a $55,000 vehicle and all these other accounts. Now I can go buy a $130,000 property or whatever. So that's kind of how you have to just kind of stair step it. Now, if you're a service-based business and you have a lot of vehicles and equipment, this builds a lot faster, as you can kind of tell off of the example I just gave.
Right. Now, I love that you explained that. So thank you for going through that, because like for me, I'm like you, I work from home. My expenses aren't really that much, but I would much rather run, if I need a new computer, I want to go buy it on business credit, not on the personal credit. It's
Yep.
like, I don't want to be using my personal business or my personal credit card for that, or taking a loan out in my name. It should be under the business's name.
Yeah.
And a lot of times people just don't understand what's possible with that. But you were talking about a couple of different ways: Amazon Business, using the Chase business card, things like that. And I know that's where I get kind of confused on some of these things is looking at, as an example, I have a business Amex card, but it is tied to my personal stuff. It's all in the same account. And they've told me they pretty much consider them, still tied to my personal account, period. And so
Yep.
to me, it's like that confuses me because it's a business card under a business name, but they're telling me it's still reliant on me, not the business. And so that's where some of this stuff gets a little wishy-washy.
Yeah. So there's a difference in how things get reported. So a lot of credit cards, especially business credit cards, are still going to use your personal information to guarantee that debt on there, which means that if you go delinquent or are late on payments, it's going to get reported back to the personal credit bureaus. However, if you maintain a good, healthy balance with those, depending on the credit card, and this is where kind of what you're saying can come in and be a little bit confusing, because some of them won't report back to the personal credit bureaus all of your activity, which is good. You don't want that, right? Because you don't want to have that utilization and debt to income show up on your personal stuff, right? It's okay to personally guarantee stuff in your business as long as it's not showing up on your personal bureaus and your reports, because that's where we always get in trouble when we go try to buy a new home or get a HELOC. And then there are some business credit cards. The guy who's the professional made the mistake with this with Capital One Sparks, that I got the wrong Sparks card apparently. And that reports all activity to both my business and my personal bureaus. So like it's very misleading sometimes, and you have to be very good at reading some of the credit card contracts that are out there to kind of understand like what they're doing and how they work. And they don't always say that. So sometimes if you have access to a concierge service, which most of those credit card companies do, you can actually get on the phone before you take your credit card out and you can ask them. Or if you have a current credit card and you're like, man, I'm curious about this. Usually I can help for the most part and solve some of that stuff, or you can call the number on the back and you can just ask them, and they're legally required to tell you how they report. That's not stuff that they can hide. So there are ways to kind of figure out like, hey, is this good or bad? And I'm going to say this too, like it's not always bad to have stuff in your personal credit if you're using it properly and it's not a large amount that should be going toward your business, because it does help you build a good personal credit score. But I always say my personal credit, I want to save that. I want to build that for when I want to go do fun things for myself and my family. And I want all my business expenses and my business accounts to be under my business, because that those two things are separate in my opinion. They're not the same.
Very cool. Thank you for explaining that, because that is one of those things that it's like, but wait a minute, I thought this was a business card, but it's not. It's attached to my other stuff, and it was a little confusing when I remember when I first had that realization. I think a lot of people don't understand it. So you did mention one of this, was it the Sparks card?
Yeah.
What is there? Can you tell us what the difference
There's
is of which one we should
so
have? Or
I'll try.
okay,
So Capital One, they've got a couple Sparks cards, and people love Capital One Sparks cards because they've got the 2% back on every purchase, right? So it's a really good rewards card. I believe it's the green card that doesn't report to your personal. I think the blue one does. But then I was having a conversation with somebody else, and they're like, "Oh, I've got a Sparks card, and I'd never seen it show up on mine." And they showed me their card, and it was like the reverse of the way I thought it was. So my thing is just verify with Capital One before you do it. I know the Venturis card through Capital One is a true business card and doesn't show up on your personal credit reports, but it's just ask questions, and be curious on stuff, and don't just trust things on face value, because that's what gets people into trouble with lending. It's no different than when you go in with your local banker, and we always talk about like, oh, my loan officer is my good friend, and I'm like, okay, so you just go in and you just sign whatever paperwork they throw in front of you and don't ask any questions about what you're signing and what you're giving them access to if you do default on this. Like, that doesn't sound like a real good friendship. Like, if they were your friend, they would walk you through this and be like, oh, by the way, if you default on this loan and things go wrong, when things are going wrong, we're going to come in and we're going to make things go even worse for you. We're going to take your house. We're going to take your kid's 401k account. We're going to take your 401k account. We're going to take your dog. We're going to sell your cat. You might even take your firstborn. But, that's all right. We're friends. Just like, sign here and agree to this.
right.
So, like, it's just kind of going, okay, what is this relationship? What am I really signing away here when I sign these documents? And what does that actually mean for me and the risk that I'm taking?
Right. No, that is good. So as we're getting close here, if somebody's been running everything on their personal right now, what's the first step that they should do to kind of start moving things in the right direction?
Yeah. So some credit cards, and I say some, will, if you got a lot of business debt on a personal credit card, some credit card companies will allow you to transfer that debt over to a business card. Not all of them will. So the best thing you can do at that point is take out a personal term loan, pay off your credit card, get that utilization down, and then you'll get into a little bit more of a stable position for like payments and interest. And then, or if you have been in business for a while, and I do say or on this too, if you've been in business for a while and you run a profitable business and you have good books, and what I mean by good books is you've got a bookkeeper, your taxes are all done and complete, is you can apply for an SBA Express loan or an SBA loan, and you can actually get market expansion loans that will allow you to consolidate credit card debt from the personal side and move that over to the business side. You can apply for a business line of credit. I actually just did this with a guy through Bank of America where he had a large amount on his Bank of America personal card. I sent him back into Bank of America. They gave him a business line of credit and a business credit card. He's not able to transfer the debt between the two cards, but he was able to use that line of credit to pay off his personal credit card, which dropped his utilization and popped his score back up. And now all that debt is where it should be over on the business side. So when I work with people, we just assess where they're at and like what we have to work with. And then we make decisions based off of that. And that's what you should do as well, is like, am I clean? Am I been around long enough, and is everything clean enough from my books to my paperwork to my profit loss, all that stuff? Can I use the SBA? SBA is probably going to be your best bet for most of that consolidation stuff. A term loan, all that's going to do is just keep it on your personal, but it's going to get it off the credit card, get it off the high interest rates, and put it into longer drawn out payments that don't hurt as much. So it's just really, or if you have enough cash flow, you can do a line of credit and pay it off that way. So there's a variety of different ways. It's just going to depend on your business model.
Right. No, I love that. It's great. It's great to have that figured out because I think it's a good plan to like, okay, how can we just consolidate this and pull it from over here and put it over there instead, and then that way things are much cleaner. So I
Yep.
appreciate that. That's awesome. All right. So as we're getting close to finishing up here, we always end with two questions. Last question will always be, how do people get a hold of you? Because I know people are going to want to reach out to you. But before that, this is the Meet Cool People show. So what does, I mean, I find you to be a cool person because, you know, that's why you're hanging out on the show today. But what does meeting cool people mean to you?
That's changed over the course of years, but meeting cool people to me is getting out and running into people that are like-minded, and not necessarily like-minded in the sense that we all agree on the same things together, but like-minded in the sense that we all have a purpose that we're striving for in life and like to collaborate and work with each other to do things better. And people that understand that life is always a learned journey. It's never you're not finished until you're, 6 feet in the ground, right? So I like to be, and I think the coolest people that I've ever come across are people that are always asking questions and always learning and always trying to be just a little bit better than they were the day before or the next day that they wake up. What can I do to be a little bit better today? Understanding that we all have our messes, we all have our issues, but how can I be a better person? How can I go to bed at night having more credits that I've given out than debits that I've taken from others, so that I can live a fulfilled life with the pursuit of knowledge, with the pursuit of purpose, and I think with the pursuit of understanding that we may not all be in the same boats. And I saw this quote earlier today. I thought it was really cool. We may not all be in the same boats, but we're all going through the same storm. So maybe you're in a yacht, or you're in a ship, or maybe you're in a little dinghy. Maybe you're just drowning. Let's all come together and work together to help everyone win and get out of these situations and get through this crazy thing called life. And those are the type of people I like to meet. And that's what I consider meeting cool people, is people that just understand that life maybe isn't as bad as everybody makes it out to be. There's a heck of a lot of more good people out in the world. You just got to go out there and find them. And you get to start that journey by being a good person yourself. And the cool part about life is we get to choose what we're going to do and how we're going to act. We don't always get to choose the things that happen to us. We don't always get to choose the storms that we have to go through, but we always get to choose how we're going to turn around, digest that information, and handle it and act as a human.
Yep. No, I totally agree with that. I don't know if you probably haven't heard me say this, but I have my favorite quote in the entire world is, the problem is not the problem. The problem is your attitude about the problem. And
super true.
Very true. Yeah. Any idea who said that?
I don't.
Captain Jack Sparrow.
I didn't know that was from.
Yep. Favorite quote in the world. That is so true. So true. All right. Awesome, my friend. So how can people get a hold of you if they're interested in learning more about how you can help them out?
Yeah. So the easiest way is just follow me on my Facebook, which is just Paul Childers, Childers. I do a lot of daily posts. I constantly post a lot of information out there. It's easy to just DM me. The other way is LinkedIn, which is also just Paul Childers. And then my website, which will be going live here, I'm hoping by the end of this week, is Blue Sky Biz Solutions. And you can check out some of the things that we do, some of the people we've helped. And if you want some more information, you can fill out the information form on that and submit it.
Awesome. Love it. Very cool, my friend. This has been good. I knew you were going to have some good nuggets for people to understand how this stuff works, because when I first heard you, and this is going back to when we first came into the same circles together, you did a webinar, and I attended the webinar, learned a lot about that process. And I was like, okay, here's the things that I'm doing wrong. Here's some of the things I need to start putting in order. And I know, literally hundreds of other people that are doing the same thing. So it's like, I knew you got the goods at that point. So it was great to be able to come here, hang out today. Thank you so much for joining me, my friend.
Thanks for having me. It's always fun to be on and chat. So
very cool. All right, everybody, get out there. Have an amazing, amazing day. As always, if there's anything I can do to help you out, reach out and let me know. Take care. And that wraps up another Meet Cool People show. Now, if you like what you heard, be sure to give us a like, subscribe, or review so I can help introduce these amazing cool people to even more amazing cool people. And just remember, meeting cool people is just the beginning. You need to have a system in place to follow up with the amazing people that you meet. This is exactly what we do for our clients. If you'd like to see if my team and I can help you, go to followuprockstar.com and check out the case study video to see exactly how we're helping our clients turn casual connections into cash clients for life. Again, go to followuprockstar.com and we'll see how we can work together to turn you into a follow-up rockstar.